I'm Greg Hunter. Welcome to USAWatchdog.com. With us, Bill Holter from the Holter-Sinclair collaboration over at JS Mindset. Bill Holter, thank you for joining us today on USAWatchdog.com.
Pleasure to be here again, Greg. Thank you.
You are the last interview of 2015, and what a wonderful article that you have coming out. And that is basically, you look back to look forward, and one of the things, I'll just kind of feed you these lines here just to start, and you can comment, that we've been told that we've been in a recovery, which is what I've been harping on, it's not a recovery, and that escape velocity is imminent. And you say, not. Why?
We've heard the word recovery for 7 years. And throughout economic and business history, we go through recovery from recession, and then you get to the expansion phase, and the economy starts to grow too strong, and the Fed raises rates, slows things down, and creates another recession. We've never gotten to the expansion phase. They just keep talking about escape velocity, and we've never gotten there in 7 years. And now the Fed has raised interest rates just before Christmas. Very first time, I believe, ever that they raised rates right before Christmas. And they've raised rates into a weak economy where credit is already tight. The only time that they've ever done that was 1937, and we know how that worked out.
Well, some people are applying normal metrics to, it's only a quarter of a point. And I said, and I say, only a quarter of a point in the most over-leveraged global economy ever in the history of money.
Exactly, and that's the problem. It's the most leveraged position the U.S., the global economy, has ever been in, and they've raised rates on it. Now, there was an article 3 or 4 weeks ago in Zero Hedge saying that it will take some $300 to $800 billion worth of collateral being sucked out of the system in order to create a quarter point higher rate. We're already under collateralized. So it's just going to exacerbate a credit crunch, and that's where we are back again. We're back into a credit crunch, which is where we were in 2008.
Well, you talked about one of your interviews, which may happen, that you think that a false flag may, tip us over the edge or a war or whatever. A lot of people have said that, incidentally. So you're not alone. You're not a lone voice in the woods there. A lot of people are saying that, but couldn't just somebody missing a bond payment like, Puerto Rico in the next few days?
Right.
They got $70 billion in bonds, and they paid out. They just paid out around $120 million to all their peeps, and their bond default is imminent. You can't make that up. I mean,
right?
What do you think about just somebody missing a payment? Somebody,
It could be anything. It could be something as small as Puerto Rico. They owe something like $1 billion. I believe it's this coming Monday because that's the first business day of the year. They don't have the $1 billion, but yet they just paid out $120 million in Christmas bonuses. How irresponsible is that? But it could be something as small as that. It doesn't have to be a big false flag. It doesn't have to be a world war. It could be anything that trips the wire.
And gold, people. The gold price is, there's been plenty of information out how it's been suppressed. Paul Craig Roberts has been out, says they suppress the price of gold to make the dollar look better, period, the end. He's a former Treasury Secretary, Assistant Treasury Secretary, and, there's been plenty of work about the suppression game. How much longer can that go on in this world of that we're teetering on the edge of an abyss?
It looks like something is happening now. I didn't get the numbers yesterday from COMEX, but as of last Thursday, pre-holiday, for the month of December, there was roughly, call it 200,000 ounces that were standing for delivery. There was only 100,000 that had been served, which leaves 100,000 ounces left to be served this week. The first thing you've got to ask is, why weren't they served on day one or day two? That's the way it was always done, and the reason it was done that way is because the shorts who owe the gold have to pay delivery charges up until they deliver the gold. So why, if you had the gold on the first or second or third day of the month, why wouldn't you deliver it right away and stop paying delivery charges? So now here we are, today's the 28th, and we've still got close to 100,000 ounces that need to be delivered. The other thing is, the 200,000 ounces that are standing happens to equal more or less the amount of gold that COMEX says they have available to deliver. What's interesting is, and we've talked about this before, we talked about the GOFO rates in London being in backwardation. COMEX had never been in backwardation, and the skeptics said, oh, well, it's not truly backwardation unless COMEX goes into backwardation. Well, that happened. It happened a week and a half ago, and we've been in backwardation ever since. Yesterday, we had backwardation out all the way to June. In other words, the price of a physical spot ounce of gold is higher than the June price. Now, how can that possibly be?
What do you think? What do you think's going on with that? It's just people are demanding their gold. They want it now. They want
right,
this.
exactly.
Give it to me now. I'm not waiting for it.
Exactly. There's only two possibilities. Either gold is very scarce and hard to source right now, or traders are looking out into the future and are saying, I don't trust that I'm going to get my gold. I'd rather have it now than hope that the contract delivers to me in a future month.
And do you think 2016 is going to be a watershed year for gold, the economy, the wheels coming off the track? I've asked this to a lot of people because it's gone on for a long time. This has fooled very smart people. You know, the manipulation and what they've done to prop this up. I mean, they clearly fraud. I mean, they committed fraud, LIBOR fraud.
Sure.
Forex trading fraud. They admitted to it.
Right. And speaking of fraud, Greg, and when you put fraud and gold together, there was a story out over the weekend that I believe it's a depository or a gold company in Dubai, the gold is gone. Something like $20 or $30 million worth of gold. It turns out they sent a letter to their clients saying, sorry, the gold's gone.
Is that going to happen to a lot of people who think they have an allocated gold account around the world?
Yeah, I think that's going to be one of the big stories of 2016, is that people are going to find out they thought they had gold, they don't have it. We've said this for a long time. I mean, there's 100 paper ounces for every 1 real ounce that exists. And I think 2016 is going to be the year that the 99 people find out that they're not one of the lucky ones to have that 1 ounce that's actually there and real.
I've heard some of the leverage is 294, 298 to 1 paper ounces.
It's over 300 if you look at total COMEX contracts versus what they have to deliver, or what they have registered to deliver. But I think the number is probably, it's closer to 100. It's north of 100 ounces, paper ounces, for every 1 real ounce. You just have to ask yourself the question, what if somebody counterfeited 1 billion shares of IBM stock and sold that into the market? What would happen to the price of IBM?
Oh, it crashed.
Right, and that's what they've done with gold. It's the same thing. It's fraud. They've counterfeited gold with paper, and this is nothing new. This has happened in an article that's going to come out later today or tomorrow. In all of history, man has always over-receipted gold that's actually held. It's happened time and time again.
In other words, they've said that we got way more gold in the vault than what we have, and they've loaned money on the value of the gold. That's what they've said.
Right. It goes back, call it 2,000 years. The goldsmiths. they would issue more receipts than the gold that they have. And then there's a run, and after the run, the price of gold is marked up to where it will clear to a fair value.
Isn't that what they've done by orders of magnitude with the bond market? They've issued way more bonds than they can ever pay back. I mean, isn't that what they've done? Yeah,
and they've done it for years and years and years. I mean, go back to, what was it, 1995. Our debt in the U.S., our debt began to move up like a hockey stick. And somewhere in the mid-late 90s was the point of no return. We really didn't have any hope of paying it back. By 2008, it was ridiculous, and at this point, it's beyond ridiculous. They can never pay back the 19 trillion that's funded or on the books, much less the 200 trillion, which is what the real number is when you include Social Security, Fannie Mae, Freddie Mac, Medicare, loan guarantees, etcetera, etcetera.
Yeah, Dr. Lawrence Kotlikoff at Boston University will back you up on that.
Right.
And is this the year, and let's look forward into 2016, what do you suppose is going to happen in your crystal ball for 2016?
I think you're going to see a closure of the system. I wrote an article just about a year ago. You can Google it. I think it was called Fact or Fiction. I used fictional characters, Jack and Jill, going out to dinner on a Friday night and waking up on Monday, and the market's closed. And I wrote a fictional account of what it might look that first week, and how long the markets, banks, etc. are closed, I don't know. I do know if, and I believe when, I don't believe it's an if any longer, but when this does happen, there's going to be a problem with distribution. And when I'm talking about distribution, I'm talking about getting food and necessities and Walmart shelves being wiped out in a couple days. This is like a hurricane coming that will last for a while. This is not going to be something that is going to last a couple, 3 days, done and gone, and then you start cleaning up after the hurricane. This is going to take a fair amount of time to clean up.
And in that fair amount of time to clean up, people are going to be running out of food, running out of water.
Right, and if you live in the cities, well, good luck, because it's going to be complete mayhem. I can't imagine living in a city with what's coming.
Because people will be fighting over food and supplies and breaking into houses and...
Yeah, people will be fighting over anything and everything that's a necessity. And there's just too much population density. You know, neighbor lives upon neighbor, whereas if you're out in a rural area and you're on acreage, at least you can see them coming.
And is this why, and Jim Sinclair, who I have a lot of respect for, Jim Sinclair, if anybody who goes on JS Mindset knows that he's famous for these little quips. You know, there'd be a news article and he says, oh, they don't see what's coming, or, he'll have some little short sentence. And once in a while, Jim, who's a very smart guy, incidentally, he's no shortage for words, he'll write a paragraph, that's the stuff you want to watch. When he starts saying, oh, I'm going to write a paragraph, oh, boy.
Right.
Well, just, not a few days ago, he wrote a 15-point, 6, 7, 8,000 word get ready, here's what you need to do to get ready type article on his site. I couldn't believe it. Why? I mean, we'll link to that article
right.
after the interview section. But why did he feel that he had to write a detailed 15 paragraphs, bullet-pointed plan on the things that you need to do to get ready for this? Why did he do that? Because he thinks it's going to blow in 16?
Yeah, I think that's obvious. He's a man of not a whole lot of words. And I asked him, I said, Jim, why'd you put this out now? And he said, because it was necessary. He believes it can be any day. I mean, the unwind could begin any day. And once this thing begins to unwind, it will take such a short period of time to unwind into closure of banks, your ATM, your credit card, etc., not working. you either need to be prepared ahead of time or you're not going to be prepared.
Oh, you're going to have big trouble.
Oh, absolutely.
I mean, it seems to me you should have some cash. I mean, you guys are gold guys, I know, but it seems to me that you should have some cash on hand. Is that part of the plan?
I think cash will work maybe for a couple of weeks. Cash will work until people figure out that cash is trash. It's issued by, call it a bankrupt nation. It's issued by a bankrupt issuer.
Well, I know people like Harry Dent, and who you've had these back and forth with, that you say his logic is dented. And I'm having a hard time figuring out how Federal Reserve notes, which are written off Treasury bonds, if the bonds are no good,
exactly,
how can the notes be good? Can you explain that?
No, I can't. You have to ask Harry what his logic on that. I mean, the logic is, think of it from an individual standpoint. Would you take an IOU from somebody who you knew was a deadbeat? The answer is no, and that's what dollars are.
I mean, listen, I like Harry. He's been a guest on the show. I don't want to trash him. He's a smart guy. You and him both agree on one thing. You know that, right? You and him, you're just coloring how it's going to look, but you both agree that it's going to blow.
We both agree that this is going to be a complete financial collapse. And without a doubt, you're going to see some deflation. But it's not deflation against dollars. It'll be deflation against gold.
All righty. Bill Holter, thanks for coming on and giving us your preview of 2016 and telling us what Jim Sinclair thinks and why I wrote that big, long article. So he thinks this is imminent. He thinks that this could happen at any time, and that's your 2016 prediction that we're going to have a crash this year.
Yeah, it's going to come this year. It could come for a big reason, a small reason. The background behind it is there's too much debt in a fraudulent system, and it's going to collapse.
And one last thing, the Middle East. I mean, some people think that, and I'm one of them, I think it's getting worse. Even though that Kerry backed down, is that significant? Kerry saying, "Oh well, yes, Assad can stay."
I think that's the biggest geopolitical event in the last 70 years. And I say 70 years because that's since World War II. The U.S. has never, ever backed down. Kerry went into the meeting saying Assad must go. He leaves the meeting with Mr. Putin and Mr. Lavrov. He comes out and he says, Mr. Assad can stay. And then later that day, Turkey was told that they need to withdraw their troops from northern Iraq. That is a 180-degree about-face by the United States on something that we've been completely firm on since 2011, for 4 years. And all of a sudden, an about-face after they went into a meeting, you have to ask yourself why. What happened? What was said? Was it something technological? I had speculated that last year that Donald Cook was in the Black Sea, was buzzed by a Russian fighter, and it was reported that their Aegis system was shut down, and they didn't know why. The Donald Cook turned around and left. Is it a technological breakthrough from a military standpoint? I've also guessed or speculated maybe the Chinese told Mr. Putin, just tell him we're going to sell our treasuries. Who knows? I have no idea. I wasn't there, was not a fly on the wall. There's not been any reports on why. But just knowing that the U.S. did a 180-degree back down on something that we stood so firmly for since 2011, something really big changed.
Do you think that puts off more in the Middle East, or do you think that that speeds it up in some way?
It's hard to say. If I had to guess, I would guess that it would. This was, in essence, the U.S. backing down. So I would have to guess that it would put war off as opposed to put it more on the front burner. One can hope.
until we can figure out the technology to figure out how they can jam our radar and shut down an Aegis destroyer and shut down our aircraft. And they also removed those 12. They sent 12. I don't know, 12 F-15 fighters to Turkey,
Right.
and then a month later they removed them all.
Right.
Why?
And that was right after the meeting.
So you think that is kind of hopeful near term, but that doesn't settle anything long term, does it?
No, it doesn't. It from the standpoint of could it speed it up? Well, yeah, it could. I mean, the U.S. could just kick the table over. I don't know. I don't know. I just know it's something very significant for the U.S. to back down like that.
You think they keep a lid on it in 2016, war-wise? Or you think it could get, if things get bad enough, they'll just... I mean, if this whole thing all crashes, aren't they going to go to war? Aren't they going to do something crazy? That's what Salente says. Many people have said the same thing, that they'll just go to war.
I don't have a crystal ball, and you're asking a really tough question. I don't know. I do know that it unravels this year, though. From a financial standpoint, it unravels. Do we go to war? Is there a gigantic false flag? Which I think is likely. I think a gigantic false flag is probably more likely than war. They have to have something to blame the collapse on. In other words, the Fed, the banksters, the elite, the people who are running the show, they can't take the blame.
They can't say, oh yeah, our policy screwed everything up.
Exactly. What they're going to say is our policy was working. The Fed will say, in fact, the economy and markets were so good that we raised interest rates.
Which is a lie.
But if it wasn't for this XYZ event or war or whatever, they would have worked. They were working. When in fact they're not. You know they're not. But my opinion is you're going to see something to cover the collapse that's surely coming.
And you think it's just too much debt and too much fraud for there not to be a collapse?
Well, too much debt is the root of the problem. It's how the system has been run for the last 20 or 30 years. It's been run on a credit card, and we've reached the limit.
Bill Holter, thank you for joining us today on USAWatchdog.com. Really appreciate it.
Thank you, Greg.